Hello everyone, I'm Zara Fatima. Welcome back to my channel. Students, today in this video I'm sharing with you a new chapter, that is ratio analysis. Under that, ratio and types of ratio I will share with you. Students, the chapter ratio analysis is from the subject cost control and management accounting for the students of BCom third year semester 6 students, and the chapter ratio analysis is also having by the students of MBA and BBA students also. So this video is useful for BBA, MBA and BCom students. And students, for your convenience, I make the arrangement of ratio analysis in such a way that it will be helpful for you for the preparation of your upcoming examination. So ratio analysis, the chapter is there. Under that you have ratios and types of ratios. So students, what is ratio? A ratio is a simple mathematical expression of one number with another number, and a ratio can be expressed as a pure number, as a percentage or as a fraction. And ratios shows the relationship between two items in a more meaningful way. So, ratio analysis is a technique of interpreting the financial statements with the help of various meaningful ratios. So, for that purpose, ratios are classified in a number of ways. Under that, the first classification is liquidity or short term solvency ratios, that you can see clearly on your screen. First one, liquidity or short term solvency ratios. Under that, first is current ratio. Current ratio is also known as working capital ratio. For that, formula is current assets by current liabilities. Now, current assets consist of cash in hand, cash at bank, bills receivable, net sundry debtors, prepaid expenses, outstanding incomes, accrued incomes, short term and temporary or current investments, loose tools, stores and space, stock. Stock consists of raw material, work in progress, finished stock. So these are the current assets. The formula of current ratio is current assets by current liabilities. Clearly you can see on your screen. Students, current assets means those assets which can be converted into cash within a period of 1 year. So under that, cash in hand and cash at bank are most liquid assets. So bills receivable, sundry debtors, prepaid expenses, outstanding incomes, accrued income, short term investment or loose tools, stores and spares, and stock. Stock consists of raw material, work in progress, finished goods of closing stock. So these are the assets which can be converted into cash within a period of 1 year easily. So current assets by current liabilities, this is the formula of current ratio or working capital ratio. And this ratio is also important from your examination point of view. Most of the time in the examination he will ask you what is current ratio or what is working capital ratio. So current assets by current liabilities, this is the formula of current ratio. And current assets consist cash in hand, cash at bank, bills receivable, sundry debtors, prepaid expenses. Now on screen you can see the current liabilities. Current liabilities consist of creditors, bills payable, bank overdraft, short term loans, outstanding expenses, provision for tax, proposed dividends, advance income. So these are the current liabilities. Now the next ratio is quick ratio, quick assets by quick liabilities. So quick assets, from the current assets subtract the stock, subtract the prepaid expenses, you will get the quick assets. Quick liabilities, current assets, from that you subtract the bank overdraft, you will get the quick liabilities. Next formula, absolute liquid ratio or super quick ratio. Absolute liquid assets by current liabilities. So absolute liquid assets is equal to cash plus bank plus marketable securities. Now next formula, basic defensive interval ratio, quick assets by projected daily cash requirement. Projected daily cash requirement is equal to projected cash operating expenses by number of working days in a year. So these are the formulas of short term solvency ratios. You can see on your screen: quick ratio, absolute liquid ratio, and basic defensive interval ratio. Short term solvency ratios consist of current ratio, quick ratio, absolute liquid ratio. Now on screen, the next is leverage or capital structure ratios. Leverage or capital structure ratios indicates the relative interest of owners and outsiders in a business. So that consists of debt and equity ratio, long-term debts by shareholders fund. Long-term debts consist of debentures, mortgage loan, bank loan, secured loan, and unsecured loan. Shareholders funds consist of equity share capital, preference share capital, reserves, surplus, share premium, retained earnings. From that subtract the fictitious assets. Proprietary ratio, net worth by total assets. Net worth is nothing but shareholders funds. Total assets consist of non-current assets and current assets. So formula of capital structure ratio, under that third is capital gearing ratio. Next is capital gearing ratio is equal to funds bearing fixed interest and fixed dividend by equity shareholders fund. Funds bearing fixed interest and fixed dividend consist of debentures, long-term loans, preference share capital. Next is fixed assets turnover. Fixed assets ratio is equal to fixed assets by capital employed. Fixed assets consist of net fixed asset consists of fixed assets minus depreciation. Capital employed, equity share capital, preference share capital, reserves, long-term liabilities. From that subtract the fictitious assets. So formula of capital gearing ratio and formula of fixed assets turnover ratio clearly you can see on your screen. Students, the chapter ratio analysis is completely based on formula. So until and unless you have a command on the ratios, you will not be able to do the problems easily. So for doing the problems easily, you must have the command on the ratios. And next is interest coverage ratio or debt service ratio. Formula is PBIT by fixed interest charge. PBIT you will get PAT plus interest plus tax. Then fixed dividend coverage ratio, for that you have a formula PAT divided by fixed preference dividend. Next formula debt service coverage ratio, for that PBIT divided by interest plus periodical loan installment or 1 minus rate of income tax. So on screen you can see the formulas clearly: interest coverage ratio or debt service ratio, dividend coverage ratio, and debt service coverage ratios. So next is activity ratios or turnover ratios. Activity ratios measures the efficiency with which firm manage its resources or assets. Under that first is inventory turnover ratio or stock turnover ratio. Formula is cost of goods sold by average stock. Cost of goods sold, sales minus gross profit. Average stock is equal to opening stock plus closing stock divided by 2. Next one is debtors turnover ratio. For that formula is net credit sale by average debtors. Net credit sale is also called as credit revenue from operations. And debt collection period, number of days in a year by debtors turnover ratio. So these are the formulas which is showing on your screen under the category activity ratios or turnover ratios: inventory turnover ratio or debtors turnover ratio and debts collection period. Students, number of days in a year, in that place you can take 365 days, or if it is mentioned 360 days, then only you can take number of days 360. Otherwise number of days in a year 365. And a net credit sale, from the total sales if you subtract the cash sale you will get the net credit sale. And average debtors, opening debtors plus opening bills receivable, closing debtors plus closing bills receivable divided by 2, you will get the average debtors. Like average stock, opening plus closing that by 2. So like that Average debtors also opening debtors plus closing debtors, opening bills receivable plus closing bills receivable divided by 2, then you will get average debtors. Next on your screen, creditors turnover ratio. Formula is net credit purchases by average creditors or average payables. Next formula, debt payment period. Number of days in a year divided by creditors turnover ratio. And next formula, working capital turnover ratio. For that, cost of revenue from operation or cost of goods sold by working capital. And the formula of working capital is current assets minus current liabilities. And what are the current assets, what are the current liabilities? Just now I told you. Now fixed assets turnover ratio, formula is net sales by fixed assets. Next is total assets turnover ratio, formula is net revenue from operating, that is also known as sales, divided by total assets. Total assets consist of fixed assets and current assets. So formulas are clearly showing on your screen. Creditors turnover ratio, debt payment period. Now on screen, next is profitability ratios. Under that, A, journal profitability ratios. Students, profitability ratios measures the profitability of the concern, and profitability ratios are most important from your examination point of view also. Under that, first is gross profit ratio. Formula is gross profit by net sales into 100. Gross profit, net revenue from operation minus cost of revenue from operation. Next, net profit ratio is equal to net profit after tax by net revenue from operation. Net revenue is nothing but sales. Operating ratio or operating cost ratio, operating cost by net revenue from operation into 100. Operating cost is equal to cost of revenue from operation plus office and administration expenses plus selling and distribution expenses. So formulas of general profitability ratios on screen you can see: gross profit ratio, net profit ratio, operating cost ratio. Students, operating cost is nothing but cost of revenue from operation plus office and administration expenses plus selling and distribution expenses, you will get operating cost. And net revenue operation, from the sales subtract the sales return, you will get net revenue from the operation. And next on your screen you can see formula fourth, operating profit ratio. For that, formula is operating profit by net revenue from operation whole into 100, or you can find out 100 minus operating cost ratio for operating profit ratio. Now overall profitability ratios, under that first is return on capital employed ratio or return on investment ratio. Formula is profit before interest and taxation by capital employed into 100. Return on net worth ratio, profit after tax by net worth into 100. And students, net worth is nothing but shareholders fund. Just now we discussed what is shareholders fund. So operating profit ratio, overall profitability ratios, under that return on capital employed ratio or return investment ratio, then second is return on net worth ratio. So overall profitability ratios, first return on capital employed. Now the third ratio is showing on your screen, return on equity capital. Formula is profit after tax minus preference dividend by paid up equity share capital. Return on assets ratio, profit after tax by total assets. Earning per share, EPS, profit after tax minus preference dividend by number of equity shares. Dividend per share is equal to dividend on equity share capital by number of equity shares. Number of equity shares, equity share capital by face value per share, you will get number of equity shares. So on screen you can see the formulas clearly. Now next is dividend payout ratio. For that, formula is DPS by EPS, DPS dividend per share, EPS earning per share. Eighth formula, price earning ratio. For that, formula is market price of equity share by EPS. Dividend yield ratio, dividend per share by market price of share. And last formula, book value. is equal to equity shareholders fund divided by number of equity shares. So students, these are the formulas of the chapter ratio analysis. And students, if you like and if you think this video is helpful, and if you satisfied with this video, give a like to this video. And still you are not subscribed to my channel, subscribe the channel first, so that future notifications related to my future videos will come to you directly. Students, share this video with all your friends, and share this video in your WhatsApp group, so that you and your friends will be benefited from this video. And students, on my YouTube channel, other lectures of your related subjects is also available. So visit the channel, see the videos, like the videos, and share the videos with all your friends, so that you and your friends will be benefited from our lectures and from our videos. So students, thanks for watching the video, and all the best for your upcoming examination. And students, stay connected with us for many more videos related to all subjects of your academics. And for the students of BCom first year semester 2, important questions for the subject business law is also available on my YouTube channel. So students, inform your friends about the videos, about the channel, so that it helps to all the students for the preparation of their upcoming examination, so that they can score highest marks in your upcoming examination. So students, stay connected with us, like and share this video with all your friends. And students, thanks for watching the video.